Welcome to FinTech Fun Talks. I'm Christine Nielsen, your host, and today we have David Lukens from IMS. He is the SVP of North America, and today we're going to be talking about scaling fintechs and some of the common pitfalls and challenges that fintechs often face while growing. Welcome, David.
Hey, thanks for having me, Christy. Happy to be here.
Yeah, I'm so happy to have you here. Why don't you go ahead and give us a little bit of a background on yourself, your experience in fintech, and where you are today?
Sure. So I'm an insurance person, so that's my
Mhm.
my avenue to fintech. Spent 20 years working for insurance companies as a buyer of fintech products. Had the product development group for AIG before being a product developer, a product person for fintech products at LexisNexis Risk Solutions, where I got exposed to a lot of startups. We would buy startups, and I had the privilege of incorporating those and bringing them into the LN fold. So I got to see kind of where they were, what the state of their technology was, what things that we had to fix. Oh, that was a bad answer. Sorry. Um, and got to see kind of patterns in their development that led them to being acquired, which was really interesting because I saw the same patterns over and over. And I also worked for an insurance fintech startup called Root, which people might be familiar with. And now I'm with IMS, which is a mature insurance telematics company. So been through those growing pains from several different angles.
Yeah, definitely. That sounds like you have seen some patterns and some pitfalls. And so we want to just jump right in and talk about some of those today. Let's get right into the meat of it. What are the most common challenges fintech startups face when they're scaling beyond their initial client base?
The biggest issue that I saw, and I saw it over and over, both inside and outside, was not accounting for scalability and modularity from the very, very beginning. I would see a pattern when we would buy and do due diligence on companies to purchase. The same pattern showed up over and over. A company would start with really smart people, really great ideas, fantastic IP, and they would get one customer, and they would build their solution to the one customer and learn a ton, right? And then they would get their second customer and they'd apply everything that we learned from the first customer. All right, let's do it better this time. And they would do that over and over again. And they would hit a threshold of about 10 to 12 customers, and they couldn't scale anymore because they had all these different branches. It wasn't scalable. They didn't have any modularity to be able to bring all of their customers up to the same SDK or the same code base at the same time. So the tech debt just became crippling. They spent so much time having to service, 12 different stacks for 12 different customers rather than have 12 customers on a single stack that they could kind of evolve collectively.
Right, that makes sense. We'll get into this, how they can avoid that and properly set themselves up for success from the beginning. But before we do that, let's talk about how a fintech company's growth strategy might differ when moving from 15 clients to 100 clients, right? So let's lay that foundation and then we'll get into some of the details of what they can do to set
Sure.
themselves up for success. Yeah.
I mean, I think in the first couple companies, it's all about engagement with the clients, learning what they need, making sure that you're building something that meets their needs, and learning and learning and learning. When you get past 15 and it's about scalability, it's all about efficiency. Like, how can I do this efficiently? How do can I double my client base and only increase my staffing by 10% or 15%? It's all about getting to economies of scale. And I think that's the 10 to 15 client number seems to be the threshold where efficiency trumps building to specific customer needs in terms of their ability to grow.
Yeah, absolutely. So, from your perspective, let's talk about what it would take. What are some things for new fintech businesses to keep in mind from the beginning before they bring on that first or second client to make sure that they're in a good place for scaling?
Yeah, I think this is going to be controversial, having been in fintechs and you're working on a bit of a shoestring budget. And
Yeah.
it's very easy to just say, what's the fastest way to get this done? What's the quickest, cheapest, dirtiest way to get this done? Get this customer stood up. And if there's one piece of advice, I would say it's overbuild. Overbuild from day one. Build in its two areas of overbuilding. One is for scalability. That's easier these days because with cloud, with cloud solutions like AWS and Azure, I think that's been a great leveler for smaller companies to compete on a big scale. But the other is modularity in your code base. It's very tempting, again, when you're trying to do things quick and dirty, is I'm just going to jump into the code and modify it. I'm going to jump into the code
Yes,
and
along the
modify it
way.
rather than take a step back and really architect your solution carefully to make it modular so that any changes you make are well documented, can be updated in the future without having to, break cement and get into the guts of the code and those kinds of things. And I know it's expensive to overbuild when you're just starting out. It's more expensive to overbuild up front, but it's a lot cheaper than having to reconfigure everything when you've got 10 clients and you're trying to get them onto a common code base, which is, again, where in the past we would buy companies because they hit that threshold and couldn't get over the hump. But they didn't need to. If they built that way from the beginning, they could keep growing well.
Yeah, that's really great advice. I like the idea specifically of modularity and having, specific components that they're not going to break each other or cause issues with each other.
Yes.
That's really good advice. Having been, in tech for quite a long time and where we did build one thing for the masses, right? And that I feel like in today's market, things are maybe a little bit more customizable. People need different things. Just having experienced the opposite of that, where you have to look in every corner and make sure you're not going to break something when you make an
Yeah.
update. It really makes a lot of sense to have just modules. Yeah. Well, let's talk about how you ensure that your product remains relevant during this scaling phase and as you're growing, making sure it stays appealing to the masses.
Yeah. I think this is true at all stages. I mean, it's all about, and I'm a hardcore product guy by background. It's know your customer, know your customer, know your customer. Like, listen. It's very tempting to have a great idea and to just come out to engagement with clients or potential clients. Say, look, this is what we can do. This is, a thing that's going to solve your problems. Listen first. And be very, very disciplined about how you do voice of customer. Do it in a way that's disciplined, that's repeatable, that's documented. So when you're having to make hard decisions about your product pipeline in the future, you have a good basis and an educated basis to make those decisions. But
Yeah,
it
but I
starts with
feel
listening to the customer. Yeah.
yeah, yeah, it absolutely does. Having been in the sales side of things myself as well, and hearing the feedback and knowing what they're really asking for, but also knowing, hey, we have a roadmap. We've got so many things that need to be taken care of and done before we can get to what your wants are. It can leave a bad taste in your clients' mouths, and it can be a hindrance to you. And so to me, having that background, I
Yeah.
really want to advocate for our customers, our clients. We want to make sure that what we're delivering to them is what they need and is going to make them the most successful.
Yeah. The other thing, just to riff on that for a second, that I've really learned, and it goes along with listening, is when you have existing customers, spend time with them and listen to them. One of the things I've learned is watch how they actually use your product because they may be using your product to solve problems that you didn't know it could solve. And that's like a freebie because that's another use case that they just handed to you for free that you may not have been aware of. So spend a lot of time with your customers and really understand what they're doing with your product as well.
That's a really good suggestion. And as you said that, I kind of felt like, almost everything that our clients give to us is a freebie. Any feedback they give to us, right?
Yeah.
Because they don't have to.
Yeah.
And the fact that they're engaging in that communication with us tells us what we need to know to keep them on board, to keep them happy. And their voice is often the voice of others as well, right? Like
Yes.
we
Yeah.
can understand what the market in general needs from them engaging in that conversation with us. So when we were talking earlier about being ready to scale from the beginning, this was one component that stood out to me and I thought this can be hard. How do we get this? How do we get the voice of the customer, so to speak, when we don't have many, or maybe we don't even have one yet? Do you have any suggestions or ideas for that?
That's hard for me to answer because I've spent 30 years in the insurance industry doing specifically the kind of stuff that we do. I think it is get out there and talk to people. Talk
Hmm.
to people, read annual reports, read things like that. A lot of times, if
That's
you
a good
read
one.
in between the lines of annual reports, you'll start to see things or opportunities where there are problems that they're having that your solution could solve. In my view, it's talking to people, talking to people, talking to people. And one danger, and this is from personal experience, because I spent so long as the customer for the products that I make now,
Yes.
I thought I didn't need to do VOC because,
Okay.
well,
Yeah.
yeah,
Interesting.
I know what they want because I was that guy.
Hmm.
And yeah, but there were 300 insurance companies, and I had experience at like four of them. So having the humility to step back and say, you know what? I don't know everything. Let me talk to people and get their perspective because they might have a different type of business. They might have a different clientele that creates different needs that I'm not aware of.
Yeah, absolutely. I think that's a common pitfall. That's not just you, right? We talk to enough people or we are the end user and we think we know. But everyone is kind of like to your point before, where there are different use cases and we don't know all of the use cases that people might be using our technology for. So
Yeah.
again, yeah, that voice of the customer really makes a difference.
Yeah. And it's interesting. I learned that from a coworker who was not an insurance person,
Yeah.
but she was a data person, but one of the best product people I've ever worked with. and
And
she
probably
was
because
doing
of that.
and she was doing VOC. And
Mhm.
I was like, you don't need to do VOC on my clients. I know what they need. And you don't know this business. You don't, what are you going to add? And the fact that she didn't know anything and came in with a fresh pair of eyes and followed that disciplined process was a real eye-opening experience because I didn't know what I thought I knew. And that can be very dangerous when you're making big investments in product development and building the wrong stuff or building the right stuff in the wrong way.
Yeah. That does sound like an eye-opening experience because she was going into it with no preconceived notions. She was
Right.
just going into it saying, "You tell me. I want to understand you. I want to understand your needs and probably some of the use cases as well." I don't know what she went in with, but just those
Yeah.
open eyes.
Yeah.
Yeah, that's really cool. And I don't think that that comes naturally to us either. So being able to see that and then emulate it, like that's a good example. So let's talk a little bit about customization. I do feel like in today's world, there's a bit of a need for that. We've talked a little bit already about um, the importance of it in scaling. And so,
Mhm.
how, in your experience, let's put it that way, how do you balance customization for individual clients with the need to standardize for scalability?
Very difficultly. With great difficulty. That's always a challenge, whether it's a big company or a fintech, or a small company or a startup. The way I look at it is I ran a global product for a big multinational company, and my clients were the different markets. And they had the same thing. Everyone's coming to me saying, I need this, I need this. And again, as a our clients do the same thing. They have needs, but then we have a roadmap for things that we want to push forward, and it's a constant struggle with that, setting priorities. Couple things that I've learned to do. One is this is a rule that's everyone's going to argue with right away. Don't ever build anything just for one customer, right? A customer may express a need for something that you need, but take that in and then compare it with your VOC. Is this solving a problem that I can use to solve for other people? To make sure that when you do build this feature, it's generalizable to other people and you can use it over and over again. That way you're going to recoup your investment 3 or 4 times, and not just for one customer to protect revenue you already have or to get a small upsell opportunity. Um, another thing that is really helpful is if you have a client who wants this new feature and it's either on your roadmap at a timeline that doesn't work for them, or it's not on your roadmap at all, a lot of times they're willing to pay for it. So they'll pay for the development. So they can pay to move up in line. And that's great, especially if you can generalize it, because then you're getting that development cost covered and adding a feature that gives you more value to the broader market.
And they're getting someone who is a subject matter expert in putting that together. So it really is a win-win, right?
Yeah.
I think that a lot of people would rather outsource that knowing that they're giving it to someone who has that background and expertise rather than tackling it themselves and wondering, am I missing something?
Yeah. I mean, I have seen cases, I've been guilty of this too. You add something and you overfit it to a specific client and you can't ever use it again. Or if you want to use it again, you have to rebuild it, which is not very efficient.
Yeah, just as much work as
Yeah.
starting over again. Do you
Yeah.
have anything else, David, that in line with what we're just talking about here in the scaling and customization that you want to address before we move on to current technological advancements?
Yeah. I think the regulatory and compliance stuff in the fintech space is really important. I think it's a blind spot to fintechs who haven't worked in that industry and had to live with those things. So there's a lot you can do and to stand out in the space from that perspective. Um, that's one area I have I'm kind of passionate about it because it can be really, really hard if you're small and you have to meet regulatory requirements to sell to a bank. Um, and there are things that you can do. But I'm looking at the questions again.
Yeah, let's talk about that. So,
Okay.
if we jump into the regulatory and compliance section, the first question that we have there is what are the most common regulatory pitfalls when expanding a fintech business? And as most importantly, how can we avoid them?
Yeah. I think the biggest problem is not really understanding the regulatory framework that your potential clients have to operate within. So I'll give an example from insurance, but it applies to banking as well. We have clients who are banks as well as insurance companies. Really understanding how they're going to use your data within the construct that they have, because that's going to replace downstream requirements on you as the provider to make sure that you're meeting those needs. So one specific example, the way insurance companies price insurance, it has to be presented to regulators in a specific way to be approved. And there are guidelines for how the regulators like to see those big mathematical formulas presented. So when a lot of machine learning algorithms, AI started getting into the insurance pricing space, they could do amazing things in terms of identifying trends that are predictive of loss, but couldn't sell them to insurance companies because they could never file that and get it approved because a regulator can't approve a black box or AI. So understanding what your customer needs and how it plugs into their workflows is really, really important. And the second big thing is, and this goes back to scalability. If you know that you have to be ISO 27001, certified, if you know you have to deal with GDPR or CCPA or those privacy regulations, build that in day one. Make that part of your product requirements because it's much easier to build to it. It's not that hard when it just creates a framework that you have to stay within the bounds of. If
Mhm.
you get a client and realize, whoa, they love my product, but I need to put in these compliance elements, it's a lot more expensive to do it later. And it could lose deals because in some financial environments, they just will not have a contract with people who don't meet certain regulatory requirements. So
Yeah, I mean, it ends up
build it day
being
one.
Yeah, it ends up being risky, right? So you can see why they wouldn't partner. There's so many regulations. Not, I was going to say guidelines. They're not guidelines. They are regulations,
Yeah.
and you're held accountable to them, whether you are aware of them or not. And so it's your job to become aware of them. So I can definitely see why it would keep people from wanting to partner with others who are not fully up to speed on that.
Yeah. And then another kind of take on that is we work across multiple markets. So we work in
Mhm.
pretty much every continent. So we work in Europe, we work in the US, Canada. One of the challenges if you're in that environment is I've got 10 different regulatory frameworks for privacy or
Mhm.
for disclosure that I have to meet. How do I manage that?
A lot.
what I found is helpful is find the hardest one and just
Okay.
do that. Whether you're in that market or not, if you're meeting GDPR or CCPA requirements, you're probably going to meet requirements everywhere else.
That's good advice. I um, wonder a lot about when you're doing that business cross-border and you've got all those regulations. So that's a good way to narrow it down because that can really be overwhelming. Let's move on and talk about culture and leadership because that
Okay.
definitely plays a role in scaling as well. If you cannot retain talent or you have culture issues, people don't want to stay. And so that makes it difficult to scale. So tell me from your perspective, the role that company culture plays in scaling that fintech startup.
I think it's critical, and I think it's something that, again, we're talking about scaling. So when you hit a certain
Yeah.
size, it's when you have to cross the bridge, get over the hump to getting into much larger. There are some things that are you have to do very thoughtfully and very deliberately. So it's easy when you're 6, 10, 30 people working on something shoulder to shoulder together. It's a very flat organization. Everybody's collaborating. It's fairly easy to keep a culture kind of consistent and have that esprit de corps of, getting your hands dirty together and pushing something forward. Once you hit a certain size and you start having to add layers of management in order to support scalability. And then you're bringing in the second and third generation of new employees past the founders and the employee 1 through 20. You really have to work to keep that esprit de corps, to keep that morale going, because it's not going to just organically keep growing as the organization grows. So things like constant town halls, like over communicate to everybody in the organization, making sure that the new folks feel welcomed and brought into the fold and that they're part of this thing and not, oh, they're the new people, like we're the old guard,
Yeah.
that kind of thing can really
Yeah.
be toxic. And I've seen that happen before. So you need to really, really be cognizant of that and deliberate in how you grow the business.
No, that's a really good point because I think, as someone who comes in at a founding level, whether you are the founder or you're just one of the early on hires, it's easy to feel maybe a sense of pride in that and a
Yeah.
sense of we did this together and to exclude those who may be brought on later. I can see how easy it would be to fall into that trap. So that's really good advice.
Probably seen it too. When you get to 200 people, the OGs, if it's not managed, can have kind of a little bit of arrogance about, oh, I'm one of the OGs, you're all the new people. So making sure you combat that's really important.
As we're bringing in these new people, you're in a period of really rapid growth and you're bringing on new hires. How do you attract and retain good, high quality talent during those times?
Yeah. It's tough today because it's a job shoppers market right now. I think, this is going to sound trite, but they need to buy into what you're doing. Like you should
Hmm.
have a sense of purpose around your business beyond just we want to make money. For IMS specifically, we were founded by someone whose son died in a car accident and had a mission to make driving safer. And yes, we provide data to insurance companies, but we've never gotten away from the core mission of our job is to make driving safer by making drivers aware of their behaviors. And it's something we live. And keeping people focused on that is really, really important. A good person can go anywhere. You can always change jobs and make more money, right? If you want a 10% pay raise, you can leave every 18 months if you wanted to do that. So it's not just about money. It's about creating a culture where people think they're part of a bigger purpose and creating a good workspace where people are happy, where people feel like their voices are heard and that they are an equal part to everybody within the organization and being diligent about that. I think it's easy to say that that's just a trend or you're paying lip service to it. It really matters.
It really does. The more people that I've talked to recently, especially in today's job market, it's difficult. Many, many companies are doing layoffs. Those who are kept at companies and are being added to, like their job roles are being added to, there's a lot of stress and there's a lot of feeling like I am just a number. And so I feel like saying this is not trite. This is something that's so important. If you want people to stay, if you want your company to have the type of growth and success that you're looking for, people need to feel like they are a part of that.
Yeah.
And they can't when you're not involving them in the ways that you've mentioned.
Yeah.
So,
And it's really, really hard post-COVID with everybody being remote. Yeah. So how do you create artificial situations that are like water cooler conversations, in a remote environment and, coming up with games to play? They have nothing to do with work. They just have about getting everybody interacting in a way that's not work related in order to build camaraderie is really, really helpful. I found that to be really helpful.
yeah. So you mentioned games and those types of things that are maybe they're more fun. They let people open up and just communicate with each other on a level that's not stressful or work related. Do you have other ideas of things, especially with the remote work, to keep things on that positive level?
Well, one of the things we do in my group is, we have like everyone get a Teams channel or a Slack channel with all the people. Like someone will go in and we call it playlist roulette. Like everyone has to go in and go into a playlist and hit random next and tell everybody what song pops up. And it's hilarious. Like,
I love it.
and then people, kind of you can rib each other. It can be we know each other pretty well, so it can be pretty harsh, but it's fun. It's like those little things just to get to know people better in a way that you wouldn't just interacting in work meetings on team calls and stuff like that.
I love that. That's a really good idea. It's funny because music is one of those things that can connect us in so many ways,
Yeah.
whether it is, like you said, teasing other people or saying, "Oh my word, I love that one too."
Yeah.
It's funny. And you're also put on the spot when you have to do something at random. So you never
Yeah.
know if it's going to be one of your crazy songs that comes out.
Oh, it happens. And it's cool because we have people from like a lot of different cultures. So then you also I love music. You get exposed to things that you would never have heard of before that
Hmm.
are really cool.
That's a good idea. I bet we're going to see a lot more people doing that after they see this. That's a fun way to do it. And I think that you're being creative. There's not I think that a lot of leadership looks at remote work as a hindrance or an obstacle. And I don't think it has to be. You come up with creative ideas like that, and people do connect. People have an inherent desire to connect.
Yeah.
And so when you create those opportunities and get creative like that, definitely will work in making the company culture that you want to while still having people in different countries, different locations. And we're getting to that point where we are, in general, a global economy. We've got so many companies that do business across the border. They've got offices in many different locations across the world. And so whether you do go into the office or not, so let's say this is to people who do go into the office, you have your colleagues there, chances are they've got colleagues in another place as well. And these are great
Hmm.
ways to be able to connect with them too.
Yeah, that's a good point.
Let's talk really quickly about what you're seeing as some of the biggest opportunities for fintech companies looking to scale in the next 5 years.
The biggest trends I see, and again, it could be different in, banking and the financial world is kind of ahead of insurance in a lot of these areas. Looking for efficiencies, looking for ways to automate things that people used to do or people do so that people can focus on higher order tasks and not spend time on lower order tasks. If it's automated decision making. So one of the things we're seeing now in insurance is in personal lines insurance, underwriting and pricing has been very automated for a long time. It's been data driven. It's been end to end, and very fast and efficient. Commercial insurance is still very manual. So bringing practices to bring data and analytics into a process, preferably up front, to automate stuff so humans don't have to touch it. And then people can work on things that people do well, like build relationships and solve problems and find good solutions for clients rather than running spreadsheets and things like that. I know that sounds old, but insurance is still a little bit old fashioned in some of those ways. I think the biggest advancements I see driving growth. One is startups with really, really smart people have access to AWS and Azure. So you can play on a big scale that you couldn't if you had to make investments in hardware on your own. So this is massive leveling up, levels the playing field to bring really fresh new ideas into the space and let people with good ideas. That's a big enabler for making these things happen. The biggest trend I'm seeing is using this data to automate functions. So people don't have to do repetitive tasks anymore. People can focus on doing things that humans do well, like interact with other humans and solve problems and things like that. Specific in the insurance space, underwriting and pricing have been automated in the personal line space for 20, 30 years and getting more so. So underwriters in the personal line space don't do now what they did even 5 years ago. But in the commercial space is still very manual. People get paper loss runs and they enter them in and they manually get quotes. It's very time intensive. Whereas those people's time is probably better spent nurturing relationships, nurturing partnerships with people, getting new clients on board rather than chasing paper. So a lot of focus on automation, smart decision making. AI obviously plays a massive role in that, although there are caveats to using AI in the FinTech space that are starting to become kind of a big deal.
Examples of those?
One, because we work with financial clients and they've been asking more and more about AI. We don't really use it
Mhm.
that much. But the places AI is used to drive efficiency within tech companies is generating code, right? Rather than sitting down and generating code, GitHub is a massive code repository. There are tools where you can use AI to automate creating code for things, which is amazingly helpful. It's super, super fast. The caveat to that is as soon as you put your code in there and you start using that, your code becomes public property and you lose your IP. And banks are very concerned with that, especially as, in this developing code in this way to manage things involving financial transactions is a big security hole for them. And they really are starting to push back on that. And I don't know what the answer to that is. I know you can buy enterprise licenses where you protect your IP, but
Okay.
AI
Yeah,
is driven by a collective, you know, pool of information. I think it's an interesting area that's
it is.
relatively new and kind of cool to watch.
It is, and will be interesting to watch and see how that changes because big entities like the banks are pushing back. And by the way, I'm glad they are, right? As a consumer,
Yeah.
I'm glad that they're taking my safety and security into account above convenience, right? But how will that safety and security and that convenience one day marry and be able to create leaps and bounds in advancements in these technologies? It sounds pretty
Yeah.
cool once we're able to kind of get some reins around it and move forward in a more controlled way.
Yeah.
Now, that's really cool. So we've got one more question for you before we end. If
Okay.
you could give one piece of advice to fintech founders preparing for growth, what would that be?
My one piece of advice, only one, it would be overbuild. Overbuild day
Overbuild.
one.
Yes,
Overbuild. Again, don't be kind of penny wise and pound foolish because you're building a foundation and you want that foundation to be sturdy.
absolutely. That's been a good theme in today's episode. And I feel like, yeah, if there's one thing that they take out of this, that's the biggest piece. So, David, thank you so much for your insights, your advice, and thank you for joining.
Thanks for having me. It was fun.